Chris, rates are at a 40-year high, and let me restart that. Chris, rates are at a 40-year high, and prices aren't going down. What the heck is going on? It's a very, very simple explanation as to why this has happened. So historically, anytime that interest rates have increased, mortgage rates have increased, we've seen prices come down because the demand side of the supply and demand scale gets pressed down as less and less people can afford the house they want. They choose to exit the market. They're no longer buyers. And with more homes coming on the market every day and less buyers for those homes, it causes sellers to have to drop their price in order to win the buyer. That's what causes prices to fall. Why hasn't that happened this time? And it hasn't happened. Just to be clear, I'm going to give you some stats here. In our market, the Triangle market, as compared to last year, year-to-date median price in Cary, Apex, and Morrisville is down 0.17%, which is not down at all. That's flat. That's less than 0.2%. Raleigh is up 3.17% as compared to last year. Durham down almost 2%, which as compared to all-time high prices is really not down that much at all. Chapel Hill, Carborough up 5.56%. By far the highest. Wake Forest, Roseville, pretty flat, up 0.1%, and Holly Springs, Fuquay down 4%. Again, these are compared to all-time high prices, and we have just witnessed the fastest, farthest rate increase in history. This rate increase is so monumental, it should be slamming down prices, and it's not. The reason it's not is because while, yes, it is impacting the demand side of the scale, it is also impacting the supply side of the scale, because the people that would have been movers or sellers and become buyers are choosing to not move. The only people that are moving right now are the people that have a really strong motivator. We're talking life events here. Somebody has passed away, needs to sell their house, or has inherited a piece of real estate that they need to sell. Or maybe it's an investor and they want to take advantage of all-time high prices. Or maybe somebody's unfortunately going through a divorce, which happens, and they have to sell. Those are the people that are selling. But everybody else right now, the average Joes who just would rather have something but don't really have that need, they're just not motivated. So the demand side is being crunched down by the interest rates, and the supply side is being crunched down by the interest rates. And when those two things move together, prices aren't impacted. That's exactly what's happening now. It's the only time I think in history this has happened. Everybody has expected the increased rates would cause prices to fall, and we're just not seeing it. We're not likely to see it. And you have to understand why. Because the only thing that's going to impact prices is if we can increase supply and demand remains constant or even falls a little bit. We didn't build enough homes for a decade coming out of the Great Recession. It is a hole that we just can't climb out of fast enough. We have to be overbuilding. And builders, while they're still building, and it's about 50% of our market right now is comprised of new construction, they just can't build fast enough. The only thing that will get us out of this massive elevated price situation that we're in right now is if we can find more supply. And the only way to do that is actually if rates start to come down. But I've said this before and I'll say it again. They cannot fix the housing issue, the housing affordability issue with interest rates. They're only making it worse. Eventually, they're going to have to come down. And when they do that, all of this pent-up activity that's sitting here on the sideline is going to start to re-engage. So we're going to see more sellers enter the market, which is going to create more supply. We're also going to see those same sellers turn into buyers, which is going to create a commensurate amount of demand. And unless one of those two things can be impacted in isolation, prices are going to remain where they're at or even go higher. Challenge me on this. Tell me why I'm wrong. It's just there's nothing in sight. Decrease regulation, make it easier for home builders to rezone land, make it easier for developers to repurpose old abandoned commercial office space that's not being used and turn it into apartments or multifamily. Maybe those things would help, but they just can't do it fast enough. So that's where we're at. That's the simple explanation. People will continue to buy and sell, and they are continuing to buy and sell, just in a much smaller number than we've seen in a long, long time. As such, we need your referrals. If you know anybody that's in that situation, that they have to move, they're going through something in life, we're working with folks like that right now. We'd love to help them. Please send them our way. We can give them the guidance and the expertise they need to navigate their situation and also make a smart decision when it comes to either divesting of or purchasing real estate. You can reach me at any time on my email, chris@gormanresidential.com. You can call our business line, 919-670-3005, or find us online, gormanresidential.com, or on social media. If you're watching this on YouTube, please like and subscribe. If you're watching it on social media, please follow us for more content like this. Thanks. Have a great day.